Okay, so yesterday we went through part one. I think it was part A or part one, whatever it was called, of the required, which covered this section and the budgeted section. So if you recall yesterday, what this question wanted us to do was they gave us what the accountant did in terms of the cost card. So remember, what is a product cost card? A product cost card is just basically listing the unit cost of each item that forms part of the cost of the product. We may note that the cost of a product is made up of three things. What are the three things? Number one, direct material. Number two, direct labor. And number three, manufacturing overheads. We said whenever you need to work out the cost of a product, always tell yourself that the cost of a product includes three items: direct material, direct labor, and manufacturing overheads. Then you tell yourself that manufacturing overheads is made up of two parts: a variable component and a fixed component. Now, which of the two do you include? It depends on the costing system. If you are using the variable costing system, then we use only variable manufacturing overheads. If you're using the if you're using the absorption costing system, then you will include both fixed and variable manufacturing overheads. Okay, so that is how you think about when it comes to the cost of a product. Now, in this question, the accountant gave us the cost of the product. Okay, so let's just quickly scroll down. Okay, so the cost of a product, here they gave us this over here, what this accountant did in including the cost of a product. So here we could see material aluminum sheets, which is direct material, material vinyl sheets, which is direct material, direct labor costs, which is direct labor. Then it included head office costs, and it included commission costs. Now we said, just looking at the line items, we need direct material, which we can see. We need direct labor, which we can see, but we don't see manufacturing overheads. Head office cost is usually not a manufacturing cost, so we needed to read note number 3. Sales commission is not a production cost. It is not a manufacturing cost. As a result, it can't be included in the cost of a product, because in the cost of a product, it is only manufacturing cost. A sales commission is a selling cost, and as a result, we don't include it. Okay, then the second part we needed to have a look at is the calculations, and that we went through yesterday. Okay, so just take note of that. Okay, there was a hand up, Madania, yes. Oh, Zakira, yes, we started. Can anyone else here? Just indicate if you can or can't hear. If Zakira's only you, then you probably just need to you probably just need to restart, most likely. Okay, so just take a note of that. Okay, so the material, so aluminum sheets, so basically whenever you, no matter how they word it, they call it a standard cost card, right? A product cost card, So don't let that derail you. They're talking about the product costs are just in a card format. That is basically what it is like. So in the manufacturing industry, they would have like a card, then they will list the item that is being used or that is included in this product. Okay, so don't let that derail you. the fact of the matter is it's still a product cost. So always tell yourself a product cost includes 3 items. So direct material, direct labor, manufacturing overheads. Manufacturing overheads, fixed and variable. So which one do you include? It all depends on the costing system. Okay, so here we could see we needed to look into this one because it's head office cost. Head office cost is generally not a manufacturing cost. Sales commission is not a manufacturing cost. It's not a production cost. It is a selling cost. Okay, so that's the first thing, the items that are included. The second was then to check how they calculated the amounts. Okay, so we went through that yesterday. So we only read that part, but then when we were going through the question, we realized this part also needed to be read with the first part. So what was important, this over here is so if you have a look at the dates, here we can see the standard signage package for May 2022. Okay, this one over here, the budget. The accountant has provided an extract of the draft budget information for the year ending June 2023. Okay, so what we needed to know, the budgeted information was based on a year, where the cost card above was based on a month. So remember, there's always the 3 things you need to be aware of. Whether you're busy with actual, number 1, have a look whether you're busy with actual or budgeted information. Number 2, look at the period, right? Are you busy with a month, a quarter, a year? And then number 3, whether you're dealing with an amount per unit, or is it the total amount? Okay, that's the 3 things you need to always be a lookout on. A 4th thing you need to be a lookout on, especially in standard costing, is the measurement units. So for example, they can give you a price in liters, but then the quantity is in milliliters. They can give you a price in kilograms, but then the quantity is in grams. So always make sure that the quantity and the price is in the same measurement unit. Okay, so always keep that in mind. You can always, you will have to adjust it. Always easier to keep the price as is and adjust the quantity to reflect the units of the price. So for example, if the price is in liters and the quantity is in milliliters, convert the quantity from milliliters to liters. If the price is in kilograms and the quantity is in grams, convert the quantity from grams to kilograms. Much, much easier than trying to adjust the price. Okay, so just take note of that. So always be on the lookout. Train yourself to look for those kind of things, so that as you train yourself regularly to look for that, it will automatically be, you will see your subconscious mind will do it automatically over time. Okay. So when we went further, we realized we needed to read over this. So this thing has material, aluminium, it has vinyl sheets, it has direct labor costs, it has sales commission, then it had head office costs, which we realized we must not include it, and then it had other expenses. What we realized, other expenses were made up of 2 things, or let's say 3 things. Other expenses were made up of 3 things. 1, fixed manufacturing overheads. 2, the vinyl paint, whatever I think it was, vinyl paint, vinyl ink. And then number 3, it was made up of nuts and bolts. So vinyl ink is used for the vinyl sheets. The vinyl sheets, this over here, the vinyl sheets is a material cost. So the ink for the sheets is required for production. So therefore, the vinyl sheets, the vinyl ink, included in this cost needed to be included on the cost card, which the accountant omitted. Similarly, the nuts and bolts in this other expenses is used to put the sheets together. Without that, we can't have a completed product. So that is a production cost. So that also needed to be included, and the accountant omitted that. Similarly, included in this amount is fixed manufacturing overheads, which the accountant also omitted, which we needed to include. Okay, so just take note of that. So just basically the accountant omitted other expenses, which we needed to include, but we needed to split the other expenses between vinyl ink, nuts and bolts, and fixed manufacturing overheads. Okay, so just take note of that. So that was basically the recap that we needed to do. Part A was to go through the accountant's cost card and comment, discuss the issues, critically discuss the problems. Okay, and then part two of part A was to actually recalculate the cost card. Okay, so I'll bring that up and we can see the answer we had. Okay, because we're going to need it for the remaining of the question. Okay, so just take note of that. Okay, so now we will move on to this part over here. I just want to read through the budgeted part again, just for recap, because we're going to need some of this information when we do the remaining of the question. So here they say the accountant has provided an extract of the draft budgeted information for the year ending June 2023. So FY 2023. So our year runs 1 July 2022 to 30th June 2023. So we have sales, we have material aluminium, we have material vinyl sheets, we have direct labor costs, we have sales commission, we have other expenses, we have head office, and we have a net profit. Okay, so the net profit that is budgeted for is 2.4 million. Okay. Unless stated otherwise, all costs remain the same as the budgeted 2022 financial year. So remember above, we had the budgeted 2022 financial year for May as prepared by the accountant. Okay, so notes, the budgeted production and sales of SP are planned to be 6,000 boards for the year. So production and sales, 6,000. Okay. The fixed manufacturing cost is budgeted to remain unchanged for the next 12 months and is driven by the number of SP boards produced. Okay, so that's very important. So remember, when it comes to fixed manufacturing costs, there are two approaches that we need to know. The ABC approach, activity-based costing, and then the traditional costing method. Okay, so if they don't tell you it's ABC, then that means it is automatically traditional costing method. You must become so accustomed to know how you calculate fixed manufacturing overheads using the traditional costing method, because I can tell you it's going to be, I'll go as saying 100% of the time, but because I can't say it's only a guess, so I'll say 95% of the time you're gonna have to use the formula for traditional costing. So as we do the question, I'll show you the formula. There's two parts of the formula you must be aware of and how to think through it. The one thing I just want to bring to your attention is that, take note, the fixed manufacturing overhead cost is budgeted to remain unchanged for the next 12 months. The important part is driven by the number of SPs produced. So remember, what is SP? Standard package. So the number of standard packages produced. So the manufacturing overheads is always based on something. Okay, so is it based on an input? Is it based on an output? So what is the activity based on? So the activity can either be an input or the activity can be an output. So what is an example of an input? It is direct material, direct labor, machine hours, direct labor hours. So if it is based on direct labor hours, if it was based on machine hours, if it was based on direct labor costs, if it was based on direct material costs, then that means the activity is based on an input. If it is based on units produced, like in this case, it is based on an output. That's very important, because when we come to standard costing, this issue of whether it's an input or an output plays a crucial role. Okay, so take note that it is based on an output, which is units produced. Okay, so so just take note of that. Okay, then they say, in addition, management has indicated that the material costs, such as vinyl ink, nuts and bolts, and machine overhead costs, are recorded as other expenses and do not currently form part of the product costs. So this is incorrect. Okay, so those must form part of the product costs. Okay, so vinyl ink cartridges are 200 Rand per liter, and each standard sheet consumes 400 milliliters. So here you can see the cost is based on a per liter, but the quantity is based on milliliters. So we convert the quantity to reflect liters. Clients do their installations, but the final package includes 20 nuts and 20 bolts. Nuts cost 100, bolts 150. Okay. Head office costs that are fixed, including machine maintenance, will not change between the range of 3,000 and 6,500. So when the quantity is between 3,000 and 6,000, the head office costs, this head office cost over here, will remain the same. Okay. Therefore, production below this minimum would result in a 200,000 cost reduction, whereas production above the maximum would result in 75,000 Rand cost. Okay, so if our production is less than 3,000, then the head office cost would be 2,880 minus 200,000. Okay, if the units produced is more than 6,500, then our head office cost would be 2,880 plus 75,000 Rand. Okay, so just take note of that. So I just wanted to remind us regarding this information because we're going to need it in this one over here. Okay, so let's go through this. Then we're going to answer the question. Then we will come back to the last part of the paper. Okay, so sales marketing options. BK's directors have indicated a minimum budgeted net profit of 2.5 million for FY 2023. So they want a minimum of 2.5 million. If we go back up, the budgeted net profit currently is 2.4, which is below 2.5 million. Okay, so they need to do a few changes to get to 2.5. Okay. Okay, so indicate a minimum of 2.5 for FY 2023 and are not willing to approve the current budget. Okay, so the current budget is 2.4, so they don't want to approve it. However, an external marketing expert was engaged by the directors using the draft budget, who commented and provided two possible options. Okay, so he gave a comment and then he provided two possible options. So the comment is, the demand for SP standard packages is considered very elastic. Therefore, a price change of 7% to 8.5% will yield an increase of 15% on the current budgeted units. So he's saying if the price changes, so by 7 to 8.5%, this will increase the units by 15%. So I'm assuming a change in, so if we decrease the price between 7 to 8.5%, then that means our units will increase by 15%. Okay. Furthermore, based on industry norms, a 5% economies of scale is expected on all standard manufacturing costs, where production and sales increase by at least 20%. Okay, so just take note of that. So, so if we change our price, then our quantity will change by 15%. Okay, if we increase our units produced and our sales by 20%, then our manufacturing costs will decrease by 5%. So we might just take note of that. Okay, so here we go. Option number 1, a 10% reduction of the selling price per SP and an increased advertising expenditure of 25,000 Rand. So if we reduce our selling price by 10%, and if we increase marketing by 25,000, this would increase budgeted sales by 19%. Okay, so units. Okay, take note of that. Therefore, the current gross profit margin will change. Okay, so we must do option number 1. We list our current items, and then we just bring this impact into account. Okay, option number 2, a massive marketing campaign of 250,000 Rand within the untapped market will result in an additional 550 units increase. Okay. In addition, commission-based payments for sales representatives are replaced with salaries, resulting in an annual cost of 1.6 million Rand. Okay. So Those are the two options. So what we need to do is to draw up the standard cost card with the current costing we had from part A, and then obviously bring in the additional items based on this information over here. Okay. And then we do the same for option number 2. Okay. So I'm going to set up a cost card, and then I'm going to give you guys, I'm going to again put you into groups. Okay. And then I'm going to give you 15 minutes to try it out, option 1 and option 2, and then we will do it together. So I'm going to stop sharing this. I will, you all have the question. If you don't have a question, just let me know, but I shared it yesterday. So if you don't have it, just let us know. Okay. I'm going to stop sharing this, and I'm going to open up Excel. She can't get into the meeting. Let me just see. So sorry, I can't see the chat when I share my screen. So you might just let me know. Let me just see quickly. Let me just quickly get that. Where is the rate of finance? Okay, so I'm gonna open up Excel. Should have it open yet? So I have it here. Okay, so I'm gonna put in the groups now. I was gonna share my Excel sheet, so you guys can see it. So this was yesterday. I'll share it in the group. I'll share when I'll upload the recordings today. Okay, so yeah, this is the standard cost card. Okay. So the amounts may not remain the same. You will have to deal with that. Remember, this one over here is based on a unit level, but we want a total budget. So we must work on a total level for this question, okay, for part B. Okay, so these are the items over here. And you can obviously, don't have to use exactly this format, but it's basically a guiding part. Okay, so and remember, we must bring in any adjustments that is going to happen. So now I'm going to put you into groups again. I'm going to give you 15 minutes to work through it, and then I'll come back and we're gonna work through it together. But I just want you to tackle it so that then when I tackle it, you have at least thought through it. Okay. Let me just quickly get those groups. I'll put into 2 groups again. Okay, so I'm going to open up the groups now. Okay, so just for those that join now, we are in groups at the moment, two groups. So what we are doing, we went through the sales and marketing option, where we must work out the new budgeted profit based on option 1 and option 2 in the scenario. Okay, so I'm going to give you guys up until 1:30 to work through option 1 and option 2. Remember, you have a spokesperson take us through it, 2 minutes each one, and then we will cover it together. Okay, thanks. Have a couple of minutes remaining, and then I will stop the rooms.
So I would say cost. I would say now your product cost. Instead of now working on material,
is the 7-1.
which is the 7140, right? Am I right? Does that make sense? That would be all our product cost.
Yes.
Okay, so I would say 1366.67 multiplied by 7140. So we're all getting 9758 in some change, right? 024. Then we would put in our other costs because we're working out net profit, right?
What do you get? What is the amount you're getting?
9758024.
Okay. Yeah.
Did you guys, are you guys also
Yeah, I got
doing
that.
that? Okay, so that would be your product cost. Um,
Okay, guys. So now who's going to be the spokesperson? Just 1 minute, each one. Each group 1 minute.
I'm not sure who's in my group, but anyone can do it.
Can you,
Sorry,
okay, I
I'm
can't
not sure
hear
the
you.
name.
Okay, yeah, go on.
Can you guys?
I can hear.
I'm not sure who's in my group, but someone, one of us, I'm not sure, one of us, anyone can do it because we were all on the same page.
Yes, you want to
You
go
guys,
for it?
who's it? Who's it? I'm sure. I'm sorry, guys. I don't know your names, but can one of you want to do it?
You can go ahead, it's fine.
Okay, so we didn't get very far. Sorry, I wasn't. I didn't. I had connectivity issues in the beginning, so I'm not sure what they were just trying to catch me up. But if we were looking at part B, the way I understood part B was that we need to figure out the net profit. We're not working out on product cost. So we're not looking at specifically product cost. We're looking at all costs. That's
Yes.
why the advertising cost, I took it into, so we did a basic income statement.
Yeah.
Our sales amount that we used on part A, we reduced that by 10%, so we multiplied it by 90% to get our new selling price.
Okay.
Our selling unit was, we had budgeted was 6,000, but that increased also by 19%. So we multiplied that by 1.19, we got a new selling unit.
Yeah.
So our sales in our income statement was the selling price that we used, which we got 2050 times 7140.
Okay.
That was our new selling price. We subtracted that from the product cost that was in part A. I think it was 1366.67 multiplied by the new selling unit. And we got a product cost. From there, I thought that we all agreed that we should subtract now the other costs that come into, which I would have taken the advertising cost, the head office expenses.
Okay.
The other cost is already included. We already included that when we worked out the product cost, so I wouldn't have included that amount from the budgeted information.
Okay.
Okay, that's as far as we got on that.
Okay, that's fine. Next. Who's the spokesperson on the next group?
Yeah, so from our side, we didn't do a calculation, so to speak. We spoke through the main talking points of each option and what we would actually consider in terms of between option 1 and option 2. So for option 1, I think it's pretty similar to the other group as well, because the first thing we picked up on was that the 10% reduction in the selling price would increase sales units by 19%. So we considered that the 6,000 budgeted sales would be increased by 19%, which is multiplying by 1.19. And then that would be based or multiplied rather by a 10% reduction in the selling price. And then what we picked up on in terms of the costs as well was that given that the sales units would now be above 6,500, the head office costs would also increase by 75,000 based on that note on the budget, which says that if the unit goes above 6.5, then about a 75,000 rand increase. And then the last thing that we picked up on was that increase in the sales units is by 19%, which is below the 20% in the comment provided by the marketing expert. So there wouldn't be any economies of scale from option 1.
Correct.
And then Nolu will touch on option 2, what we discussed on that.
Okay.
Hi, everyone. So for option 2, what we picked up is firstly on the sales units increase of 550. So once again, because that is an increase that's above 6,500, it will also affect the office cost expense. So then we would have increased that in our budget by 75,000. And then this was a result of the marketing costs, the marketing campaign. So then that's why we would have also increased the marketing cost expense to be at 250,000. And then the sales commission would be replaced by the salaries, which would result in a cost decrease of 200,000 because we would remove the sales commission of 1.8 and have salaries of 1.6 as an expense in the budget.
Okay, so let's go through it together now. I'm going to share my screen now. Okay. Okay, so over here, what we're going to be doing is we're going to do option 1 and option 2. So this was the cost of law yesterday. I realized we left out one item over here, so I'm going to highlight it in orange so that you guys can go through it on your own and identify it. So we must not forget, I've actually forgot to mention it yesterday. Let me just quickly stop sharing here. Yeah. So I was just reading through the question again yesterday. We forgot this part. Where did I see it now? This over here. So remember the scrap value. Okay. So we sell, so there's basically a kilogram of scrap aluminium is currently worth 10 Rand. Okay, so we use that basically that 10. So we will actually reduce the cost by that byproduct. Okay, so remember, we put in 100%, 8% is become wasted, right? So that 8% material that is lost is actually scrap metal. And that scrap metal, we sell it for 10 Rand a kilogram. Okay, so we actually need to bring that in. So basically, for each item, 2 sheets go in. How many kilograms is a sheet now? Where did we see that? Let me just quickly see. Okay, so there we go. So each aluminium sheet weighs 4 kilograms. So basically, so we put in 2 sheets per item. So the scrap amount that we needed to bring in. So I'm just going to put this over here. Okay, so remember, 2 sheets go into the system, right? Same over here. 2 sheets go in. Each sheet is 4 kilograms, right? So each sheet is 4 kilograms. We must take the cost at 100% over there, but for the sales value, how much is lost is 8%, right? And 8%. And then the selling price over here, the cost of each machine was 100 Rand per kilogram. Here it is, what did they say? Let me just make sure I read it correctly. It is a kilogram of material is currently worth 10 Rand. Okay, so they be multiplied by 10 Rand. So over here we multiply by 10 Rand. So remember, 2 sheets go in. Each sheet is 4 kilograms, but what is lost is 8%. That 8% is sold as scrap, okay, for 10 Rand per kg. So therefore we multiply it by 10 Rand. So if I put this in, it's going to be equal to 2 sheets that we put in. Each sheet is 4 kilograms, but of the 2 sheets at 4 kilograms each, we only lose 8%. Okay, and that 8% we sell for 10 Rand. So that is the amount. But remember, because we are making money, it reduces the cost. So that is basically the adjusted. So I'm going to make it in other color so you can see it's an adjusted amount. Okay, so just take note of that. Actually, it slipped my mind when I read it. And when we went through it, it slipped my mind. So that's like important things to take note of. Okay, so as I was going through, then I realized I forgot about it. There was actually another point I wanted to bring to your attention is when you're going through a question, right? So usually I rely on my memory because I remember the things just because I'm used to teaching it, right? But as a student, so that is a typical mistake a student would have made. When I was a student, I used to make that same mistake, is we read it and I immediately identified that needed to come into the question. But because we went through such a long process, by the time we answered the question, it totally slipped my mind. So what you would want to do is this thing, when you read it, just make a note on the side to remind yourself that this must come in as a byproduct in the cost of a product. So just take note of those type of stuff. So this is like, as I went through the question again, I realized I missed this one. So as a process, remember like yesterday when I spoke about when you mark yourself. So if I had to mark myself out of C, I've never included this. But this is one of the items where I knew I wouldn't have gotten it wrong. I just forgot to include it. I knew I needed to include it, but I forgot I needed to, when I did it, I forgot to include it. So I wouldn't be so disappointed with myself, but as an important lesson that I take from here is somehow I need a way to remember not to forget it. So one way to remember not to forget it is to make a note on the side of your paper that this needs to be included in the cost of a product, so that when you read when you go through the question again, you will quickly identify that this needs to be included and you wouldn't actually forget including it. Okay, so just take note of that. It is something that you that you will learn as you mark your question, that some items you did identify that you must include it, but when you actually did the question, it totally slipped your mind. So that is, and it will happen even more in an exam because of the exam pressure, the time limit, so many things going through your mind. So you must find a method to remind yourself that it must be included. Don't store it in your brain. That's why in accounting, I always tell I recommend to students, don't remember the financial year. Write down the financial year on a piece of page so that it's easy for you to see it, because if you're going to store it in your brain, it just adds to the mental load. Okay, so just take note of that. This we forgot. And like I said, I actually knew I needed to include it. I just completely slipped my mind. But when I went through the question again, I realized we did not include it. Okay, so just take note that that needs to be included. It reduces our byproduct. So you're using the principles of joint and byproducts. So remember, a byproduct reduces the cost of joint products. Okay, so it reduces the joint costs. Okay, so let's move on. So now we're going to do part B, which is the sales commissioning. Okay, so we need to work out the you should be able to see this. So I would basically set up in this kind of manner. I would basically set it up in this manner over here to get to the net profit, and then we'll just add in additional items that is needed. Okay, so let's have a look. We would need sales, but so I would just basically include this for now. I'm going to go the long way. There's a quicker way, but I'm just going to do it the long way. So over here, I'm going to include it. Okay, then we would have, okay, actually, I'm not going to do it like this. I'm going to remove that. I'm going to say total manufacturing costs, because we have the manufacturing costs on point number 1, total manufacturing costs. Then we're going to have gross profit. Okay, I'm going to keep it like this for now, and then because I'm using Excel, I can insert lines as I go along. For your purposes, if you're writing on paper, you want to skip a few lines just in case. You want to skip, for example, leave a few spaces before gross profit, so that you can add in any additional items that need to be added in. I'm gonna just ignore that for now, because I can insert rows. Okay, next we would have so the sales minus this gives me which are my manufacturing costs, which will give me gross profit. Then I can add in these items over here. So head office costs, other expenses, and sales commission. Okay. So head office costs. Okay. Sales commission. So this one over here, this line item, other expenses, I'm not going to include it. Why? Because I remember from part A, other expenses is included in the manufacturing costs. Okay. So from part A, other expenses was included in the manufacturing costs over here. So there's no need to include it. Then I'm going to have net profit. Okay. So I'm just going to, I'll just insert one line over here. So I'm going to create formulas. Okay, so now I'm going to have, so that is basically my setup. Okay, so that is my setup. Obviously over here, I'm going to be including different line items, but for now, I'm going to say equal the sum of this. Okay. And then over here, it's also going to be the sum. Okay, so that will be my net profit. So now my setup is ready. Now I'm going to go about answering this question. Okay, so let's go do option number 1. Okay, so they say a 10% reduction of the selling price per SP and an increased advertising expenditure of 25,000 Rand would increase budgeted sales by 19%. Therefore, the current gross profit margin will change. Okay, so what they want us to do, a 10% reduction in the selling price. So let's have a look. So for FY 2023, this is the current selling price. So the total sales is 14 million, and that is based on 6,000 units. Okay, so the new selling price would be a 10% reduction of that. So let's have a look. So I'm just going to do some workings over here. Okay. Okay, so there's my workings. Okay, so working 1. Okay, I'm just going to do the long approach. I mean, you can do the calculation right next to over here. I'm going to do it a bit longer because the whole point over here is for me to take you through the thought process. If I write it over here, it's not as intuitive, but over here, when I take it through the process, it'll be easier for you to understand. What you need to gather is not every working that I do, you must do in an exam. Some of the workings that I do over here can simply be done next to the calculation to save time. Okay, so please take note of that. The reason why I take the long approach is to help you develop a way of thinking through the calculation. Okay, so the current sales value, current budgeted sales, you might just take note if I take down the right numbers. Okay, so you can just help me with that. But it is this over here. Okay, so it is that over there. Okay, so it is 14 million. Budgeted units is 6,000. Okay, so therefore price per unit is going to be 14 million divided by 6,000. So that's the current selling price. Okay, so that's the current selling price. So 10% reduction, 10% reduction would be equal to that times 90%. Okay, So my selling price is 2206. Okay, so that is what I said. Reduce the price by 10%. So that is what I said. Reduce the price by 10%. And this will result in budgeted sales increasing by 19%. Okay, so budgeted sales. Budgeted sales, 6,000. Okay. Increase by 19%. So that will give me equal to that times 1.19. Okay, so that is my budgeted sales. Okay, so there we go. So budgeted production and budgeted sales. Okay, so there we go. So now we can work out our selling price. Okay, so new sales would be okay, yeah, so new budgeted sales would equal that new selling price would equal that, and okay, so new revenue or new sales would be that times that. Okay, so there we go. That is what I would have gotten. We will check. We'll check the solution, or you guys can do that as part of your homework to check the solution. So option 1, insert option 1. So this would be equal to that over there. Okay, so over here, working 1. Okay, so we're happy with that. Now we're going to do production costs. Okay, so now we're going to do production costs. Okay, so now remember, we just need to have a look in terms of what is, so take note of the following. I just want to go back here quickly. So remember they said the demand for SP is considered very elastic. So a change in price between that will yield an increase of 15%. Okay, there will be a 5% economies of scale if the production and sales increase by 20%. So over here, the production and sales increased by 19%, which is lower than 20%. So there wouldn't be any economies of scale. Okay, so just take note of that. So we accounted for the reduction in selling price. We accounted for the increase in budgeted units. What must still take into account is the 25,000 Rand. Okay, we must also look at this concurrently. Okay, we must also look at this concurrently. So so the units have changed, but it's still less than 20%. So therefore, we won't incur this economies of scale of 5%. Okay, we won't benefit from that. So if we go back over here, so we accounted for the reduction in sales. We accounted for the increase in units. Okay, we must still account for the advertising costs, so we can bring that in. Advertising costs. Advertising cost is going to be minus 25,000 Rand. Okay, so we brought that in. So what we might just have a look is we must still work out the manufacturing costs. Okay, so we're going to go to working 2. So working 2, it is going to be so working 2, manufacturing costs per unit is going to equal to that over there. Okay, so I'm going to say here from part 1, from part A 2, I think, something like that. Something like that. Okay, I think that was the that is what the question was. So manufacturing costs, so we have that, so we're happy. Okay. Units produced, okay, is going to be the 1740. Okay, so total manufacturing costs. Okay, so total manufacturing costs total manufacturing costs would just be that times that. Okay, so that is basically what we're kind of getting. Okay, so this is C32. So I'm going to say over here equal negative C32. Okay, and this is going to be working 2. Okay, then I'm going to make a comment over here. Not cost per unit not reduced by 5% as below 20%. Okay, so you remember in cost accounting, there's marks for not including stuff. So you must make a comment. I remember I've said this in other classes. I mentioned this before. Because once I did a relevant costing question when I was still a student, and when I looked at my the marks I gained when I marked myself, and I looked at the marks I gained versus what was the amount of marks that was required. So let's say the question was worth 20 marks. I got, I think, 10 marks or 9 marks, right? So then I'm like, okay, I thought I knew relevant costing. And I mean, I struggled with relevant costing initially, but at that point, I felt I finally got it. So when I went through it, and I'm like, okay, I never got all the marks. So why didn't I get all the marks? And that was the question I asked myself. And when I looked at the solution, so I got 10 and let's say 9 or 10, and the question was worth 20. So how did I lose 50 to more than 50%? And when I went through all the calculations, I had every single number 100% correct, right? So every number was 100% correct. But I failed the question because I did not include why I did not include something. So there can be situations where you include all the numbers and all the numbers are correct, but you still fail the question because you did not include why you did not include something. So when you do not include something, always leave a comment. Okay, so over here, you can actually do it like this. You can actually do it like that, for example. Okay, so that is just take note of that. When you do not include something, tell them why you're not including something. Okay, so just take note. Okay, so now we're gonna have head office costs. So for head office costs, I'm gonna have a working 3. Okay, I'm gonna have a working 3 for head office costs. Okay, so head office costs budgeted. Okay, so I think it was 2880123. This was given. Okay, additional costs for units above 6,500. It was 75,000. Okay, so the new cost is going to equal the sum. Okay, so that is C36. So here I'm going to say equal negative C36. Okay, so there we go with that. Then we have sales commission. So the sales commission, what was budgeted for? Let's go back to the question. Okay, so this option 1, we took into account the reduction. We took into account additional units. We took into account the 25,000 Rand. So we're happy that everything over here is accounted for. We had a look over here. So we could not apply the 5% because the increase was less than 20%. Okay, so we're happy with that. Now, we just need to complete everything else. We took into account the head office cost over here, which was above the range, so we're happy. So the only thing we have sales in our thing. This is included in production costs or manufacturing costs. Other expenses also included in manufacturing costs. We dealt with head office costs. So the only thing we need to deal with over here is sales commission. Okay, so we need to know how much do they get per unit. So it is 1.8 million. So 1.8 million. So over here, I'm just going to have working for. Okay. So working for. Okay, so working for over here. Commission budget. Okay, which was 1.8 million. Then we have, what was it now? Number of units sold, 6,000. So therefore, commission per unit. Okay, so it's going to be equal to that divided by 6,000. So 300, okay, number of units. New, what's it called over here? Okay. So the new number of units is that. So the new commission is equal to that times that. Okay, so 2142. So that is C42. So I'm going to go over here, equal negative C42. Okay, so that is basically the net profit. So as you can see, net profit option one, number one, definitely out because the net profit that was budgeted for was 2.4 million. Okay, so option number one, definitely out. Okay, now we're going to do option number two. Okay, so now we can do option number two. Okay, so option number two. Okay, so option number two. So let's go have a look at option number two now. Okay. So option number two. So a massive marketing campaign of 250,000 Rand. So let's put in that. Marketing campaign. It's negative 250, 123. Okay. Within the untapped will result in an additional 50 sales increase. So this is only for the untapped market. So we need to bring that in. So let's go do that quickly. Sales, current market, sales, untapped market. Okay, so we have to do that. So let's quickly go back. Okay, so I brought that in. We just need to put in the numbers, but at least I now need to work towards something. In addition, the current based payment for sales representatives are replaced with a fixed salaries in an annual cost of 1.6 million. Okay, so sales commission 0. Sales annual salary costs. Okay, equal, negative 1,600. Okay, so there we go. So now we need to just do head office costs and we need to deal with this over here. Okay, so we covered the 250. We covered, we never brought in the numbers, but we brought in the line items. We know we need to deal with it and we dealt with this part. Okay, the only thing we need to keep track of is this thing over here. Okay, we need to keep track of that and we need to keep track of this over here. Okay, so either easier 20% increase, then we can have economies of scale. So that we must all figure out. Okay, so let's say a massive marketing campaign of 250 with an untapped result. Okay, sales increase. Okay, so let's have a look. So a massive marketing campaign costing 250 within the untapped markets will result in an additional sales units of 250. In addition, okay, so let's have a look. So let's have a look what we're going to deal with over here. So I'm going to have a look quickly. Because I communicate budgeted mark, okay, not willing to approve. However, external expert was engaged. Okay. So the untapped market is going to be 550. So working 5 for the untapped market. Working 5 sales units untapped market 550. Okay, so what would be the selling price? Let me just see now. It's not clear from the question. What would be the massive marketing campaign? What would be the selling price? Unless all costs remain the same as the budgeted 2022 financial year as prepared by the accountant. Okay. The accountant used 14, so we got that. Let me just see quickly. So the accountant charged that 2451, which we got over here. Two, 4, 5, 1. Okay, so let's check something. Just give me one moment. They say calculate the outcome for each option provided by the expert and advise on the best sales option. Use the standard cost card and sales prices as calculated in part A. Okay, so use a standard cost card and sales prices as calculated in part A. Let me just quickly see. Okay, so let's have a look. That is our selling price. Okay, so we may use a selling price. I'll come back to this one afterwards. Okay, so we need to use the selling price of part A. So here we're gonna go selling price per part A. Okay, so this is going to be equal to that. So the untapped market. Okay, so that is our untapped market. 1246. I'm going to bring that in. Okay, now we need to have a look at this over here. Okay, so our current sales market. So for our current sales, so now let's just have a look at something. Okay, so remember our budgeted sales selling price. Our budgeted selling price is what the accountant has, which is this 2451. Okay, so which is this over here, 24. Oh no, that's sorry. Which is this year 2451.40, which we calculated. Okay, so 2451.40. So that is the budgeted selling price. Okay, selling price per selling price. Selling price per part A. So the selling price from part A is this 2610. Okay, so what is the change? So change in price. So the change in price is what? Is new divided by, let's do it the normal way. New minus old divided by old. Okay, so the change is 8%. Okay, so just take note of that. Okay, so the change is 7.52%. So go back to the marketing experts information. The marketing expert said, if the selling price, where did they say, if the price changed by 7 to 8.5%, there will be a change on the of 15% on the current budgeted units. Okay, so there'll be a change of 15% on the current budgeted units. So therefore, because the budgeted selling price currently is 2451, which is the incorrect price, right? And the correct price is 2617. So if we use the correct price, there will be a change in price of 7%. Okay. So therefore, that will result in an increase of 15%. Okay, so we will say price change from budget to part A results in 7.52% reduction. Okay, therefore, current budget, how do I spell this? Budgeted units increase by 15% per marketing expert. Okay, so just take note of that. So now let's have a look. What would be, so current budget units. So current budgeted units, 6,000. Okay. New budgeted units. Okay. 15% increase would be that multiplied by 1.15. Okay, so it'd be 6,900. So just take note of that. So it's 6,900. So therefore, total units would be, so the total units would be this over here plus that over there. Okay, so it would be that, which would be so 6,900, and it would be the 550. Okay, so therefore our new budgeted units would be the sum of that. Okay, so just take note of that. So we'll be 7450. So please take note of that. Okay. So our new okay, so just take note of that. So now, remember what we need to work out as well is the following. If our increase is more than 20%, we will have a 5% cost reduction. So we need to work that out as well. Okay, so we can one time work that out. Current budgeted units and our total new budgeted units. So that is 6,000. That is 7450. So increase percentage in units. We can simply use the formula new minus old divided by old. So as you can see, the increase is more than 20%. Okay. So here we're going to say increase in units more than 20%. Therefore, 5% economies of scale will apply. Okay, so that is basically what we must just take note of. So now we can continue with this question. So the current market is going to be 6,900 times, let me actually just work it out. So the current market is going to be, where is this now? So we're going to be using that price and so we're going to be using the new budgeted sales and the selling price from part A. Okay, so just take note of that. So if I'm going to take this over here, the budgeted units over there, so sales from current market is going to be equal to that multiplied by that. Okay, so just take note of this. So this is C83. So I'm going to be equal C83. So just make sure you follow this whole thing over here. So this was working 5, working 5. Now we can work out the manufacturing cost of working 6. Okay, so working 6, the manufacturing cost. Okay, so cost per unit. So the cost per unit from part A is 1360. Okay, 5% reduction for economies of scale, which is going to be equal to that multiplied by negative 5%. Okay, so then, okay, so adjusted costs per unit. Okay, so now we can work out, so now we're going to use the total number of units. So where's the total number of units? Which is the 7450, and that will be our new cost. Okay, so that will be our new cost, which is just basically whatever that is. So that is C89 equal negative C89. Okay, so that is kind of our, I'll go through it again. I can't remember if I took into account everything. Head office costs will be exactly the same as that over there. So head office cost will be exactly the same as that over there. So working 3 we can apply. We're done with all of those. Okay, so I think I've covered everything. I'm just going to go back quickly. So option number 2, let's have a look. If you have a massive marketing campaign, we will take 250. We took that into account. Then we have an untapped market, which will result in 550. We took that into account. In addition, we took this into account. Now remember, this 550 is for the untapped market. Okay, that's for the untapped market. So we need to still have a look at this comments over here. If there's a change in price of 7 to 8.5 between that range, we will have an increase of 15% on the current budgeted units. The current budgeted units is 6,000. Okay, so now remember the accountant based the selling price on the incorrect selling price that he did. Okay, of 2,400 rand. But if we use the selling price from part A, which we calculate as 2,200, then that is a decrease in price of 7.5%, which falls within this range. Because it falls within this range, the current selling price, the current units will increase by 15%. Okay, so therefore it went from 6,000 to 6,900. So that means the current market, we have 6,900. Untapped market 550, so the total units is 7,450. Okay, now when we compare the new units of 7,450 to the original budget of 6,000, it resulted in a 25% increase in units produced. So therefore, because it's more than the 20%, our costs will reduce by that 5%. And that's basically what we took into account. Okay, so we covered everything over there. And then over here, head office costs was more than the 6,500. So we also incur the extra 75,000 Rand. So the budgeted was 2.4. Option number 2 results in 2.457, just a marginal difference. But in this case, both. So we can say this one over here, less than the budget and less than the min of 2.5 million. Okay, so therefore reject. Okay, this one over here, more than the budget, but less than the minimum of 2.5 million. Okay, so we can't outright reject. Therefore, management may look further into option 2, but option 2 will not meet the minimum of 2.5 million either. Okay, so they must still have a look. So they can look into it, but both don't meet the minimum of 2.5 million. So it beats the budget, the current budget, but it's still not the required budget of 2.5 million. Okay. Do you have any questions? I'm going to stop here. Do you have any questions? Any questions, Kennedy, Nasipi? Any questions, Manania, Nalu? Neko, Shaheen, Zakira, do you have any questions on Madania, nothing? Kennedy, anything on your side?
No, I'm good as well.
Okay.
I followed through.
Okay.
Also on my side as well, thank you.
Okay. So just take note of that. Okay. Just one thing I want to bring to your attention is the following. Okay. So the question over here is, which selling price do we work on? Okay, so which selling price do we work on? Over here, they never gave us, in option number 2, they never gave us any selling price, right? But the required says use part A selling price. So that's why we use the 2266, whatever it was, right? 2267. Over here, we apply the 10% reduction, not to the 2261, not to part A's selling price, but we applied the reduction to the budgeted selling price, the incorrect budgeted selling price of 2245. Okay, so you might just take note of how do you know which one to apply. It took me a little bit of time to think which one to apply, but because they never gave us anything over here, we just used the one that they told us to use, which was part A. Here they're telling us apply a 10% reduction. So the assumption would be to apply the 10% reduction on FY 2023. Okay, so therefore we had to apply the 10% reduction on this that was given. So what was given is this over here. So this is the incorrect price of 2451. But we had to apply 10% reduction to this price, and that's why we used the incorrect selling price and applied a 10% reduction. With option number 2, we used the correct selling price, but they didn't tell us to apply a reduction. They just said this will happen to the units. So then we use, because the required says use part A, so therefore we use the correct amount. And because the correct amount we compared to the budget, and remember also, the marketing guy is giving this information based on the budget. Okay, the marketing expert is giving this information based on the budget. And that is why we apply the 10% on the budgeted number of 2451. Okay, so just take note of that. We over here, he just said there will be a 550 because of the campaign. He said nothing else. So we use the selling price of part A, because the required says use the selling price of part A. The big question is, why did we not apply this 10% to the selling price of part A? Why did we apply the 10% to the budgeted amount? It is because the marketing expert is using this 10% based on the budget. Okay, so please make sure you can get that right. It took me a little bit of time to figure out which price to use, but what I just did was I put myself in the real world, right? Like so for example, if I had to present this to the board or to the director, so for example, I just did a budget for the company I work at, and then like the director ripped it apart, right? He ripped it completely apart. So I kind of put myself in that position, and I'm like, okay, so what did I do? And I kind of replicated this, and as if this was me, and I'm talking to the director that went through the budget that I created, right? So so that is how I kind of figured, okay, where to apply. But it was a little bit tricky for me to think what to apply the 10% on. To apply this 10% on the part A, or to apply it on the budget. So how do I know I apply this on the budgeted amount? Is because of the fact that the marketing expert looked at the budget. He does not know about part A. Okay, so but over here they gave no numbers for selling price, and the required said use part A. So therefore we used the 2267 of part A. Okay, so I hope that clarifies. I hope that clarifies the question. Okay, so I know we still needed to, I'll have to do I'm going to do a recording because I was going to be behind. It'll be a bit late now. So I will do, where's this now? I don't know where I am now. Anyway, I'll do a recording of the last part. Okay, then I'll send it to you guys. Zakira?
Sorry, Faiz, I just have a quick question about that. So we're comparing option 1 and option 2 based on, and we need to give an opinion, right?
Yeah.
So do we not, I know you said now option 1 because they told us this is based on the budgeted information. So that's why you use the 10% on that. But now does it make a difference that we're using 2 different selling prices and we coming to the
different,
like,
what you call it. So
yeah,
okay,
like
yeah.
we're comparing, but we're using 2 different selling prices. Does that make a difference?
So so technically it does make a difference, yeah, but that's what the required told us. Okay, so just because the required says use part A, if the required was silent on using part A, then all the selling prices would have been based on the incorrect selling price, right? And then actually option number 2 would have exceeded the 2.5 million budget. But because the selling price is reduced, it still doesn't meet the 2.5 million. If we had to use the normal selling price of, if we had to use the incorrect selling price, then option 2 would have been the outright winner. And I guess that is why they asked us to use option number part A's selling price, and part A's and part A's cost. Whereas for option number 1, the 10% reduction that the marketing expert has given us is based on the fact of the budget that he has looked at. And that is why we used that incorrect selling price per the budget. Okay.
Okay, so it wouldn't make, so in a situation like this, we have to, because of what they specifically
yes,
said.
so it wasn't 100% clear. It wasn't 100% clear, but you kind of needed to read between the lines.
Okay.
I guess it was most likely an oversight from the test person, because I think in an exam they're not there to trick you, right? So I personally feel probably not the best worded, and they probably want was that obviously the person writing the paper, you know what he's thinking, right? So I guess they could have worded a bit more clearer, because now the required said use part A. So if I hadn't to think through it a little bit more, I'd have probably reduced in part A, in option number 1, I'd have probably used the part A sales of 2261 and reduce it by 10%. But that wasn't the case. So, but I just felt it wasn't probably worded correctly. But what made me think about it was is the fact that the marketing expert said reduce the selling price by 10%. The marketing expert does not know about part A. The marketing expert only knows what he saw, which was the budgeted information. Okay.
Okay, thank you.
Yeah, so I'll have to finish up the rest of the paper, then I'll send a recording. Won't be today, but it'll be in the week. Okay. Thank you very much, guys. I'll see you guys next week. Okay.
Thank you.
Okay, bye-bye. I hope you found it beneficial. I hope it was useful. And I'll share some more like study tips. Like I've spoke about it yesterday already, but study tips is very how you study, the questions you work through, how you work through a question, and all of those type of stuff. I will share. I'll kind of repeat what I said yesterday. Okay. Thank you very much. Bye-bye, guys. I'll see you next week.